Hey,
All
Matthew. How we
right.
doing?
Welcome. Hello, we've got Cheryl, Dia, and Neil with us, and I was just introducing the webinar before I moved you guys over. Tonight, we're going to be talking about navigating insurance, going over coverage line items. We have with us, as I said a moment ago, Jonathan Gallagher and David Donahue, the two build specialists here at BZ Build Co. And we're also joined by our special guest, Bryan Houser from Greyhawk Premier Insurance Solutions, and he's here. He is a associate vice president there, and he's here to talk to us about this topic, which I know is definitely of interest to everyone rebuilding after the Eaton fire. So, Jonathan, David, if you guys want to introduce yourselves, and then we'll introduce Mr. Hauser.
Awesome. Thank you, Matt. We're delighted to be here tonight to talk about insurance. I'm Jonathan Gallagher. I'm a build specialist at BZ Build Co. I am a real estate developer. I've been developing property for over 10 years now, born into a construction family that's been in construction for over 65 years in the LA area. I've worked on single family, new home construction, addition, remodel, as well as multifamily and, like I said, industrial. So I'm excited to bring my experience from start to finish of a real estate project, from the acquisition all the way to full construction, certificate of occupancy, and even lease up to the BZ Buildco team to assist in rebuilding Altadena. David?
Thank you very much, Jonathan. Really appreciate it. Thanks, Matt, for that fantastic introduction. And Brian, we're super excited to have you on with us. This is a great series that we put together, the Rebuild Roadmap. My name's David Donahue. I'm also a build specialist with BZ Build Co. and have over 25 years in the housing industry. And so it's exciting to be able to kind of cover this really detailed topic, one that I think is really complex, hard to kind of get your arms wrapped around. So everybody who's here with us, I think you're going to be really excited there because Brian has put together a spectacular presentation. And so with that, Brian, I'm going to turn it over to you, ask you to share a little bit about yourself, and then we're going to turn it over and enjoy the ride.
Wonderful. Thanks for the intro. I'm excited to be here and really excited to kind of help people understand, be able to ask the right questions and kind of, you know, be a source of information even after.
Fantastic. Looking forward to it.
Excellent. And just a note, everyone who's attending, if you have questions, please drop them into the chat or into the raise hand or the Q&A box as well. You can do questions in either of those. I'll be monitoring both of those so that we can be sure to answer them either during the webinar or at the very end of the webinar. We'll have a dedicated Q&A section. But I will go ahead and queue up the slideshow if you gentlemen are ready.
I'm ready to go. Thank you.
All righty.
Awesome. So while we're getting towards the very first slide, I kind of wanted to start off by looking at the coverage line items. And it's essentially like the basic elements of your policy. And they are broken into four parts. And if you could go to the next slide, when we look at the very first part, coverage A, dwelling, you're going to be looking at that as your main build for the home and the structure itself. And when we look at that, that's something that you really want to pay attention to make sure that that is representing the true value to rebuild your home. And if you purchase a home for 2 million, that's not necessarily going to be what that cost is. It's going to be more a function of the square footage of the property, the way that the building is built, and how much it would cost to rebuild the building itself. Nothing to do with the cost of the land. And then kind of moving over into the coverage B side, we have elements of the property that surround it that are not attached to the main structure itself. Like it says there, fencing, a detached garage, ADUs and stuff like that are in that category. And so we generally like to see coverage B somewhere around maybe 10% of coverage A. But again, every property is different. Some properties could have very expensive fences and other elements that you'd want that level to be a little bit higher. Moving over into the coverage C part, that is a really critical piece of the puzzle because I think it's misunderstood a lot. Coverage C is all the personal items that are inside of the property that you own. And what you actually have to really pay attention to with that is every line item, like whether it be clothes or jewelry or computers, is not necessarily fully covered just because, let's say you have a covered C limit of $100,000. That doesn't mean that you have $100,000 of jewelry coverage. There are sublimits under that. And after I describe coverage D, we'll go into those sublimits within the personal property. But it's really important to know what those sublimits are. So if you have anything over that value, you can get a personal article floater that kind of steps in and covers you past those limits as well. The very last part is coverage D, loss of use. And this is something that I've had a lot of experience in seeing policies of people having much lower coverage in this area than they should. This is if you are displaced and your home is unfortunately burned down and you have to live somewhere for a year, this covers your rents, this covers your storage, moving costs, and that can be extremely pricey. And I've seen, really low limits in this area of like $10,000. And when you have a catastrophic event, it's not going to take you very far. So even though your insurance agent should be paying attention to these and making sure this limit is decent, you should kind of be thinking about what those monthly living expenses would be if the worst were to happen and what you'd feel comfortable having in that area of the coverage D side. If we could go to the next slide, this is the personal items in coverage C that I was talking about before. So if you have essentially value in any of these categories that goes above 2,500 for firearms or silverware and gold and pewter over 2,500, jewelry and fur over 1,500. That is the maximum you can claim for that item unless you get a separate personal article floater policy. So these are pretty much exactly the same for every single carrier. And so it's just be very mindful of this amount. And if there's something you want to cover, make sure you bring that up to your broker so that they can get a separate policy for you for that.
Can we ask a couple questions, or I'd like to ask a couple questions, particularly on the jewelry side of it,
Yep.
watches, etc. So if you said a personal article or a personal floater, is that right?
Yeah, personal article floater.
Can you give us kind of an example? Let's say somebody has some really nice stuff. Let's say it's worth over 50,000 or 75,000. How is that then valued on a personal article or floater? Does it have to, do these items need to be appraised? Do they need to have receipt of purchase? Is there any sort of information you can kind of help us with on that?
Yeah, I'd say when it comes down to just proof of any item of loss, I'd say the more proof, the better. And there's not necessarily a blanket answer to say if you have X, Y, and Z, there's no question it's going to occur. The higher the value of the item, like if somebody has, I guess, artwork in the hundreds of thousands, that will be scrutinized and have to be documented far more in detail than if you have, let's say, I guess, a watch that I'd recommend taking a picture of it so you can see the model and everything. And then most likely you could find something online that is relatively the same and priced in the same way. Jewelry, carats of diamonds, like if it's real gold or not, it just becomes very difficult to get from a picture. So I would just recommend having documentation surrounding that, either if it's certifications for jewelry, that would always help as well. What I always do and recommend to my clients as well, just as a kind of backup at a bare minimum, go around your house with your phone and take a video and just go over all of the computers, the furniture, jewelry, even take photos of it, and then just store that somewhere. So at least you know everything that's there at a basic level, and it'll help jog your memory if the worst were to happen and you can kind of remember certain things. I also think you should have backup, but that's a kind of a good start to do as well.
And Brian, and I appreciate that information. Thank you. Is there, so for example, if somebody said they had $50,000 worth of jewelry or artwork, could they set that limit of what they wanted coverage for?
Um, in a separate policy, you would get a personal articles floater and you'd say, I want 50,000 for jewelry, I want 10,000 for computer and production equipment. Um, it would be up to you to make that list and come up with that amount, and your premium is essentially just based off of the a dollar amount and how that stuff is being stored within your property and how risky they feel it is to cover it. And every carrier kind of approaches it a little differently.
Great, thank you.
And then real quick, Kara, you had a question, you had your hand raised. If you want to go ahead, let me figure out real quick how I can. There we go. You're allowed to speak, Kara, if you unmute yourself. There we go.
Coming into dispute. Hey guys, our adjuster is, I'm thinking, kind of new. Very nice guy actually, but he has said that, because he said, you know, jewelry, watches first, blah blah, capped at these things, firearms, that kind of thing. And then he came back to us and he said, actually, and we're with State Farm, so this is a big company, and he said that he thinks that he can get it through because it looks like in the policy it's actually for theft, these limits. Have you guys seen that or heard that discrepancy? Or we're
That's
okay.
interesting. I haven't run into that specifically. I mean, whenever it comes to insurance contract or insurance policies in
Hey,
themselves,
Brian,
I always say,
I'm sorry to interrupt. I
yeah.
couldn't hear the question. Could you
Oh,
repeat
okay.
it?
So,
Um,
what Kara asked was, she's got an adjuster who may be a little new because they were saying that they thought they were going to butt up against the limit, but upon further review, he thinks that, and they're with State Farm, he can get it through because he believes the limits on their policy, and this may not, I'm sure Brian, you'll go into this, may not apply to all policies, obviously, but on their specific policy, their adjuster believes, their agent believes that the limit is only enforced or applies when it's theft. Sorry.
The adjuster, not the agent. Yeah.
Adjuster, yes, sorry.
And just an FYI, guys, David is very quiet compared to everybody else. Mike. Yeah.
Thank
Which
you,
is
Kara.
weird because I promised you in real life it is not that way.
It is not.
It's Mike, it's not him.
Let's see. I will see if I can find a way to boost your volume, but otherwise, David, if you could just be closer to your microphone.
But to touch on that, while we're figuring out those audio issues, I would say every insurance policy is a contract. So whatever is written there, that is the baseline. Doesn't matter what your broker or any insurance agent says. It very well may be the case for you. I would just say, could you just show me where it says that in the policy? And if it does, I'd say you're good to go. And so, whenever there's any coverage question, and obviously trust with your broker is really important. You can take their word for it, but say, could you just show me in the policy where it says that? And you can at least see for yourself how it's written, because in the end, if it ever goes to court, if it ever has any discrepancies, they're going to revert back to what it says on the policy more so than what was said.
And then, thank you, Brian. We have one additional question from Neil. So Neil, if you can unmute yourself, please ask.
Yeah, I'm just responding directly to Kara's question. I have a State Farm policy as well. And again, as you said, it's based on the language in the policy, but I've confirmed this with my adjuster for the jewelry specifically, that 1,500 limit for my policy only kicks in once we've reached the maximum overall personal property. So
Yes,
let's say
yes,
yeah,
you're correct. My apologies for not including that bit of information. Yes.
yeah. So for me, like, let's say my just theoretical number, $100,000 total for personal property. If I hit that, I then can get an extra 1,500 to cover jewelry beyond that, and then I'm capped out. But it's not just all jewelry is capped at 1,500. It's only once you hit that limit. So just wanted to add that specific to First State Farm.
Yeah, that's really good to know. I think it's important to like really talk to your broker about your specific policy, because every in every carrier kind of approaches it slightly differently, but these limits are pretty consistent, at least these levels throughout most carriers for the personal items. So that's helpful to know.
I wanted to add on here too, Brian. We didn't list it. It's actually happened to me in the past, but like an e-bike, for example. I had issue with coverage for my insurance company because they qualified it as an auto because it had a feature on it that it would propel without having to do a pedal assist.
Right.
So I think it's really important for people when identifying their insurance policies, if they have specific personal property items that have value, that they make sure that there's not specific provisions within the policy that neglect them.
Absolutely. And I'd say that would go for anything in the personal items area. If there's something that you really care about that has a high value that you want to protect, I would get a dollar value attributed to it and talk to your insurance agent of how the carrier is going to categorize it and how they're going to look at it specifically. And so, because I think there is a lot of ambiguity there where you just don't want to be kind of left out hanging when you thought something was true when it wasn't. That's a
Thank you
good
for that.
anecdote.
I'm doing a little bit of an audio check-in, Matt. A
Oh,
little bit
you're
better?
much better,
Okay.
David.
Thank you.
And then I
Cool.
actually have a question for you as well, Brian, in
Sure.
regards to limits. So this is for repair and replacement limits. Are there limits for sublimits and categories for loss of use? For instance, our house is still standing, but we were out of it for 3.5 months while it was being remediated, smoke damage, ash damage, that sort of thing. All of our soft goods were removed. We still have not gotten our soft goods back because the company that we're working with every week has a fun new excuse for why they can't get them to us. And so I had to buy new clothes. I had basically the gym shorts that I was wearing the night we evacuated, and then a few
Right.
clothes that I had left at my in-laws over Christmas. And so I had to buy new clothes and everything. That's technically not replacement because I'm getting, theoretically, my clothes back from first team eventually. But do you know, would loss of use then have any sort of cap on subcategories like that?
Uh, Now, I haven't really heard of caps on specific subcategories within the loss of use. I've kind of seen it as more of a bucket in that area, at least the way I've seen it treated in the past. So it's it's difficult to say, and I would probably just revert back to what does the policy say, and then specifically what does the agent say as far as those sublimits go, because a carrier very well may have a sublimit for a very specific area, but they won't necessarily tell you that in when they just say you have 50,000 for coverage D, and it'd be up to, I guess, you or the agent to at least, disseminate that to you.
Got it. Thank you.
Of course. Let's take a look at the next slide. So this is a really important one, replacement cost versus actual cash value. And it's really important on a number of levels, but the very first one is if you're somebody who is having a bunch of agents compete to provide you with the lowest price on your home insurance or any type of insurance, quite honestly, it's really important to make sure that the dwelling value is being calculated for replacement cost and not the actual cash value. Often I do see if a broker's trying to win purely on price, they will put actual cash value, which obviously reduces the premium significantly because it is the replacement cost minus depreciation. And so let's take a hop to the next slide. And so looking at the actual cash value in the definition here, it's the depreciated value of the item. And so with your home, if it was built in the 1950s, you're going to have an adjuster essentially go in there, calculate the replacement value of your shingles, your drywall, your lighting fixtures, your carpeting, and then apply a depreciation amount to each of those items. And it comes out with some number less than the replacement cost. And it is very ambiguous and uncertain and not a boilerplate process to figure out what that depreciation is. It's the adjuster that does that. You never want that ambiguity. You want replacement costs above all. Sometimes you have to get actual cash value because of maybe some deferred maintenance that and a carrier won't give you replacement costs, but that's a very, very small percentage of reasons why. So it's very important whenever you get quotes, make sure that they are categorized as a replacement cost for your dwelling part of the property. Let's see. So the actual cash value can also apply to personal items as well. But again, I would encourage to try and get replacement cost more so than ever going for the actual cash value side of it. I have seen where certain carriers do categorize a roof as actual cash value and the rest of the property as a replacement cost. Sometimes they like to pick it apart like that and I guess mitigate their risk that way. But just always, whenever you get a quote, ask the broker and then ask them to show you in the policy where it shows replacement cost. It's usually denoted by RC as you see there. And if we could, unless we have any questions from you guys, we could hop to the next slide. Maximizing the payouts, that's obviously the goal for any time you have to actually make a claim and get your money's worth for the premium that you're paying. If you want to hop to the next slide. So, like I said before, when you have an insurance policy, it's like a contract. And you want to make sure that whatever is written in there is what you assume to be covered. And so when it comes to making a claim, proof is always king over everything else. Having those receipts, even having the video like I talked about earlier to be able to kind of show people, show the carriers what you actually have in your house. And then when it comes down to contractor bids and actually rebuilding and the cost associated with that, a licensed with contractor with a very good reputation is extremely important because you want the carrier to be able to confide in their estimates and their assumptions and the way that they present everything and not want to hire their own person to go and make their own judgments. Sometimes they'll do that regardless, but having a contractor that can provide very accurate bids that is licensed is extremely important in making sure that you get the full value of replacement cost when it comes time to rebuild. In terms of the, I guess, evidence that you do need to provide, it's not a very cut and dry thing. It's more of provide as much as possible. It's better to have too much than not enough. And, when you go through that rebuild process, save everything, have all the documents. I'm sure most, general contractors, and you guys can speak to this better than I can, but during the process, if you're doing some form of construction that is going to be buried or covered the following day, make sure that there's documentation of that more so than just on an invoice, so that there's a visual representation of what transpired and not just what was written.
So I want to kind of jump in with a couple of things. That last point that you made, I think, is really great. So not only for the homeowner having to kind of go through and take pictures and document the things that they have, but also that, for example, so I built an ADU a couple of years ago, and I have a very specific HVAC system that's up in the ceiling behind the walls. And if it were to have been, if my property was lost in a fire similar to what happened in Altadena, I think all of that would have been vaporized. I mean, it would have been melted and gone. And when I got my bid to do the HVAC system in the ADU, it was like 7,500, but we went with a ducted mini split and it doubled the price.
Mm-hmm.
So you're saying, hey, make sure you get that proof of it, the insurance, the receipt, being the receipts, so you can show the insurance, but also have it documented with the photographs. So thank you for that. But
Exactly.
my one comment is that a lot of people who lost their homes or multi-generational residents, and they have had their home and their family for decades and decades.
Right.
This is a lot for people to kind of get prepared for. Are there sort of kits that people can have? Is there like
A
something that's
workbook.
really simple? Yeah, like a workbook. Good thing, Matt. Is there something that people can kind of say, okay, oh my gosh, I don't want this to happen to me because I'm hearing so many horror stories. Is there something that I can have that I could go, I need to go do this really, really quick, and it's very simplified. It is like so simple that anybody can kind of follow it. And if there's not, maybe there's some other resources. But I just want to ask that question. If anything, if you knew that off the top of your head.
Are you saying as far as having, if you're going through the rebuild process, what to do, or if you
Before
suffer a
it.
full loss?
Yeah, so before it, let's say, because now
Oh, okay.
everybody, so before it's like, is there, for example, Matt might not, as have an example. He was displaced for quite a while, and he may be, someone in his situation might be thinking, oh, good gosh, I'm glad, so happy I didn't lose my home. But now I really need to start dotting the I's and crossing the T's. Is there like a sort of a workbook of things that he could do?
Yeah, no, that's a good question. I don't, off the top of my head, I don't know of a formal kind of, list that's been created to provide all of this, but that's actually a great idea and something that I think would be fairly easy for me to kind of create and make a kind of nice PDF where someone could kind of have this list they go down that would at least get them to a very respectable baseline to have stuff accounted for and covered on that sense. So yeah, that's a good way to think about it because there are a lot of moving parts. There's a lot of documentation, there's a lot of things that you have to keep track of, and it's it's a lot to do. And it's something that would definitely be helpful to kind of have on that. So that's actually a pretty good idea. I don't know anything that exists off the top of my head, but
Well, if
something
you
that can
do
be
come up with
created.
something like that, I'm sure we'll be able to put a link into the in the comments in the description of the video once we post it. So
Absolutely.
we would welcome that. And thank you.
Definitely. Um,
I want to mention one thing
sure.
here. In terms of maximizing payouts, especially you say those affected by modern building codes. So a lot of the individuals that we are speaking to, they don't have obviously a lot of experience with home building and development. And so
Right.
the understanding of what code requirements the building and safety department is going to require as part of that building is going to be something that we will only find out once we submit a set of plans to them. So I think it's important to encourage, like you said, is providing documentation. And when you have documentation, when you have a plan set that you are working on to actually replace and rebuild your property to give to the insurance company that has all of the line items that are going to be required per
Right.
code, the solar, the sprinklers, the landscaping plan, anything and everything that the city and county are going to require, those are important to document, to provide to the insurance company to maximize all of those specific coverage items.
100%. And that just kind of reinforces what I said earlier. It's like having someone who's licensed, experienced, that's doing it, knows the language, knows how to present it is everything in making it more efficient and making the process move forward. Because if there's any doubt or if there's some ambiguity and they're not sure about the contractor, it just delays the process overall. And yeah, exactly what you said. Like having someone who provides that service and has experience doing it is worth a lot. It really helps the process move along. I think in terms of maximum payouts, that kind of concludes that slide. There is a coverage called ordinance or law that uh, I'll touch on, I think, later on in the slides as well. But that it addresses the kind of modern building codes issue that a lot of people have questions about. So hidden and overlooked costs, if you can go to the next slide, they are, this is essentially the ordinance or law portion of the policy. And so you don't necessarily have everything that's covered to rebuild the property if you have, let's say, $500,000 for replacement cost. If your home was built in 1950, when you rebuild it today, there's going to be a lot of codes you have to abide by that weren't included in that kind of initial dwelling estimate for a replacement cost. So the ordinance or law coverage addresses that specifically. And ordinance or law is generally broken up into three different sections. There's a loss of the undamaged portion. So let's say half the property burns down, it covers the other half that didn't. The demolition cost. Half the property burns down, or even a quarter, you have to demolish the whole thing. That would be on you unless you had an ordinance or law. That's the B section of it. And then the increased cost of construction, that is all of the code compliance, all of bringing a house up to current codes. And the older the property is, the more important this coverage is specifically. And so for the loss of the undamaged portion, I like to see full limits. So if you have $1 million for your dwelling replacement, you should have $1 million for the loss of undamaged portion. For demolition and increased cost of construction, I'd say if they're separate limits, they can be about 10% of the dwelling. So if it was $1 million rebuild, about $100,000 each should be fine. And sometimes they combine those limits, and then 15% should be okay on that front. That's like a general kind of rule of thumb I do see. This in the admitted markets is almost always just included. When you go to the non-admitted markets, this is something that is definitely not included unless it's requested by the broker. I always request it, and it's also not always given because it's a very pricey coverage to try and get on a property. And so my goal is to always get the ordinance or law coverage. And then when I present it to the client, I have to at least describe what part of the premium is because of the ordinance or law coverage. I've seen it as high as 30% of the overall premium is just this coverage alone. And that can vary depending on the age of the property, a lot. So that's something, once you go to the non-admitted market, you have to be very on your toes, or at least trusting the broker to let you know if ordinance or law is covered, or at least ask them to show you where it is as well and what those limits are for those A, B, and C coverages.
And Brian, for people like myself that sometimes have, I understand it, admitted and non-admitted, but could you just kind of dive into that a little bit more? Because I think that's really critical. Some people are talking about, well, I paid that much for my policy, and why are you paying that much? And somebody could have might have a policy from a non-admitted when somebody has it from admitted. Could you just explain a little bit more about what those two terms mean?
Yeah, on a very basic level, the admitted carriers are admitted in California, which means the policies they present have a general conforming nature to them of including ordinance or law, and including various items, and they're all very similar in their structure and what they do cover. The pricing is also controlled by the insurance commissioner, so rates as far as being able to raise them and charge certain amounts is controlled more stringently. The non-admitted market is more kind of, pick your own adventure in a sense. And so that's when a broker is even more critical to the process, because you can pick and choose things a lot easier. And non-admitted is absolutely more expensive to go that route. But it's somewhere where most properties that have a high risk of wildfire or some other aspect always are going non-admitted. I'd say probably like 60% of the homes I'm insuring right now are probably going to the non-admitted market, just because of the wildfires that occurred, or if it's a very high value home as well, you have to go to a non-admitted market as well.
And
So that's kind of the difference.
could you talk about why that is? I mean, why they're having to go non-admitted again?
Because admitted carriers have a small little box of zones that they want to insure, types of properties they want to insure. If it doesn't fit in that box, they won't insure it. And so essentially the first process is, if I get a home presented by a client to me, I try all the admitted markets. If that's not an option, then you go to the non-admitted markets. You always try the admitted markets first, because that's going to be your best coverage for the best price. But once all of them essentially say, we're not going to cover it, then you are forced to go to the non-admitted markets.
And so non-admitted means that they're not bound by the regulations by the California State Insurance Commissioner.
Correct. So the pricing is always, whatever they're deeming to be kind of, I guess appropriate for that risk. There are also policies that kind of run through the middle, where you can get a California Fair Plan as a base, you can get a wrap to go out on top of it. And so there's kind of some middle ground there as well. But overall, the not admitted market is somewhere where it's really important to at least have somebody that can go to a lot of different carriers and then be very detailed in the way they disseminate what the coverage is that they're presenting to you and what it actually has. Because an actual policy is like 150 pages, and you shouldn't have to be able to read through it and understand all of it. I should be able to break out the spots and say, hey, it says it here for this coverage and show you, but it's something where you really have to rely on the broker to be able to distill it down and let you know what's actually being covered with the policy.
I thank you for that. I really appreciate the added clarity. So what I'm hearing is that if you're because we are facing some really significant headwinds with insurance in the state of California.
Yeah.
There are a lot of insurance providers who are pulling out of the state, and that is leaving a lot of people that, yeah, I think they're going to be forced to go to the non-admitted market. And have you seen or do you know yet of what people that are going to be rebuilding are going to have as an option to be able to purchase those new policies to cover their rebuild home? Have you had enough time to really look at that yet?
Yeah, I mean, I've been doing, insurance policies for people that are in the process of building the builder's risk policies, and nobody's really, that I've seen yet has really finished their build since the event at all. But when it comes time to get that, there's no question that I'm able to find coverage for them, but it's always a factor of how comprehensive the coverage is and what that premium is. And so that's always a conversation with the client to say, hey, let's just say the premiums for a bigger house is up here at like $14,000. We have on ordinance or law X, Y, and Z limits. Do you want to keep those? Do you want to reduce them? Figure out different creative ways to reduce the premium and also take care of whatever risk appetite the client has as well. Everything is a lot more interchangeable on the non-admitted market. So it's really, you can have that conversation once you get the quote and say, hey, I want to, reduce something here, increase something here, and kind of have that ability to change things. One thing I would point out is AM Best is a third-party institution that rates insurance companies. And the non-admitted market, there are hundreds and hundreds of carriers. There are some that are rated B, B minus, C. For instance, I only use A plus companies, A and A plus, and they are independently rated by AM Best. So you as a homeowner can take the carrier that the broker gives you and verify yourself on the AM Best website to see what their rating is and make sure that they are A rated. Generally, quotes say what rating they have on AM Best, but that's a good tool to use to make sure that the carrier you're getting is something that you feel comfortable with, that if something happens, they're not going to be insolvent.
Great. Thank you.
I might add to that too, David, that certain mortgage, or like mortgage to the lien holders, they will require if you're going to use an admitted carrier, or sorry, not admitted carrier, that they and Bryan can speak, this is A or A minus. They are very specific about who they will and will not work with. And from my
Yeah, that's a good
experience,
point.
many times they've gotten rejected. So we are definitely facing challenging times in the insurance space for properties in California. So you got to make sure that you have a good insurance broker who's working for you, who can find policies that are acceptable if you have a mortgage.
Yeah, and one quick thing to add to that is most of the time the lender minimums are the same throughout, but talk to your lender and say, hey, what are my policy lender minimums? You want to know that before you set out on this adventure, so at least you don't go through all the work and then have the lenders say, oh, but you have to adjust this and this and this. And so you can at least start out knowing what kind of numbers you have to hit. Uh, I'd say we pretty much covered that one. I can obviously, provide more detail on that, in writing afterwards as well. So documentation best practices, we definitely touched on this a little bit at the very beginning. If you want to hop to the next slide. Um, we yeah, exactly. So we were talking about the photos and videos. I said, for your personal items and stuff in your home, walk around with your camera and just take a video of things. Take photos of the insides of cabinets where you store something that's valuable, if it's inside of a safe. Because we all know that safes work, but sometimes stuff gets charred and then it's hard to really identify what's in there. More documentation is always better. And the same goes for once you actually start rebuilding and you're getting contractor bids and you're actually going through the rebuild process, making sure that you have a contractor that documents everything really in a very professional and in a way that the carrier is going to accept as, I guess, as the best source of information and not try to seek out their own information to double check something. Um, the pre-loss inventory is tough for the multi-generational homes, like you said. A coffee table that was passed down from generations, a different kind of heirlooms and stuff like that. There's certain things that it's hard to even attach a monetary value to, but I would at least say having a video or photo of those items is a great start, because it at least shows that it was in your house. And so it's always a good start at a bare minimum to do. Do you guys have any questions surrounding those at all? We kind of talked about it a little bit earlier.
No, I think it's pretty good. I think one of the things that's coming to my mind is that we want to make sure to do as a company is have a very detailed sort of job completed set of documents that so we can kind of give somebody not only the physical copies but maybe digital so that they can share it with a family member so that we are doing everything
Right,
on our side to document what's going on behind the walls. As you mentioned, it was a really good recommendation to, sort of document everything of the components of the build. And once you do that, this day and age is great because you could have, something digitally stored in the cloud and you're basically always going to have that, which is,
right.
just kind of popping in my mind. But
To speak to
Absolutely.
David's point too, I think it is very important in today's day and age to document, your HVAC equipment, making sure you got model serial number inside your home. Part of our the things that we do at BZ Build Co. with the design element is all the interior finish fixture items. Faucets can be very expensive.
Yep,
And tile selections as well. So understanding all the ins and outs. Historically, people may have they installed a HVAC system and they didn't pull a permit. And so if they didn't have a record of it with no permit, may have lost a receipt, didn't take a photo of it. It's hard to justify that work had actually been completed. So
right.
with job completion, making sure you have all your reports, paperwork, and any equipment, appliances, you have models and serial numbers to back that up.
Absolutely. Yeah. I think that's a good point. Uh, yeah, we could I want to make sure we try to get as much information in here for everybody as possible. We'll look at the next slide. Uh, yeah, negotiating line item discrepancies. So when looking at the discrepancies, when you get that from an adjuster, that's when essentially the rubber meets the road of documentation and having your backup for the statements or the items that you're claiming. That's when having that licensed contractor that is experienced is going to become extremely valuable. And, having your receipts for something that you purchased or a photo of serial numbers or model numbers is also something that, we mentioned before, but is so important on trying to make sure that you get the full value of what you're claiming. And so, approaching disagreements it's very nuanced because it can be a small disagreement, and adjusters are people like you and if they hear more representation of why something is priced the way that it is, they show evidence maybe online through an antique a store online that can show this piece is actually worth a lot more. It just helps build the picture because for them they have to be able to go back to their boss and justify why this has a certain dollar amount. So if you give them the tools to be able to argue on their side why they attributed a certain dollar amount to something, then they'll feel more comfortable providing that check to you essentially and giving you that payout. We could hop to the next slide. The building code upgrades, this talks about the ordinance or law that we touched on beforehand. The older the property, the more critical this coverage is. And Just to kind of reiterate, admitted policies most of the time have this baked in. The percentages aren't necessarily always the same, but usually this coverage is always in there. On the non-admitted market, you must verify that it's on there. And if it's not, ask to get it added. And obviously, if price is a consideration, which it always is, it's important to kind of know how much of the premium it contributes to. But overall, ordinance or law is going to be your kind of lifeline when it comes to rebuilding your property, especially if it's over 30 years old.
Yeah, and I just want to kind of jump in, and I know Jonathan can too, because this point is so critical. Ordinance or law is going to be driving, tens of thousands of, if not more than that, for the rebuild cost for people. It is, solar, it is all the electrification that you need to have. Title 24 is how energy efficient your home is, and those things, I have an older house in Burbank, and we're slowly insulating the walls on the outside of the house because it was not required in the 1930s when this house was built to have insulation. So that is, probably all over, the homes that were lost in Altadena, that they were built to just, just a different code. So there was a significant difference in what the codes were in the 1930s, 40s, and 50s and what they are now. And that's
Right.
why we're seeing some of the California state legislature look at kind of pulling back some of those California building code standards just a few years, not too far back, but just to give a little bit of consideration because the costs are just so expensive to be able to comply with it. So what Brian is saying, even though, and correct me if I'm wrong, even though ordinance law may be a significant line item in your policy, it is a critical component of that to be able to replace it to the building codes that the home is going to have to be built to.
Right. Exactly. And in some cases, 10% may not be enough. If you have a $1 million replacement cost and to bring it up to code, you have $100,000 in there. If your home was built in the 20s or is a very unique house in that sense, it may not be enough. And it's hard to say and make that estimation yourself without kind of talking to a contractor and getting that kind of expert opinion on, hey, if we had to rebuild this, I mean, what am I in for? And just kind of trying to figure that out a little bit because it's so nuanced and it's a lot, especially codes in California. We have a lot of them. So it's definitely
So
an
here's a
important
question for you,
coverage.
if you don't mind this rabbit hole jump in. Let's say I see what is the max on ordinance law that I wanted to. You said 10% might be a little bit low. Could I do 25%? Could I do 30%?
Absolutely. Yeah. I mean, you can, not every carrier will offer that. Some carriers will cap it and not provide that percentage. Some have a max percentage of sometimes 25%. Some will only go to 10%. Especially on the non-admitted market, every carrier is different. And so if ordinance or law is really important, it's to make sure that your broker understands that so that they can then go out to the carriers and find the carriers that have the best ordinance or law coverage, who are known for having those higher percentage limits.
Because that would be just again staying down this rabbit hole of looking at somebody who is a whose home was not burnt and who still has it there, and they're having to see what their neighbors and their community members are having to
Right.
face, and they don't have enough with 10%, and they're going to have to go out and say, "Oh my goodness, I need 25 or I need 30%." I mean,
Correct.
because the people that are in that part of the foothills in the very high fire zone areas. I mean, this is something that is going to be really critical to get that message out that they need to really examine what their policies are to make sure that they could replace their home, in the unfortunate event that we had something else happen.
Absolutely. And just kind of to piggyback on that a little bit, a lot of people have had their policies with State Farm for 20 years. If you've been in your house for that long, sometimes the policies increase by a certain percentage point every year. They don't always. And so it's really important to just kind of open up your policy one more time, look at those amounts if you haven't looked at it in a while, and try to figure out, is this enough? Has this been looked at? With current building costs, I mean, the amount the building costs have changed from 2020 till now is incredible. And so it's something that definitely is worth a second look.
No, and I appreciate that. And I do want to be respectful of everybody's time here tonight. I know I could really stretch this thing out for a lot longer than just an hour. Oh my goodness, Bryan, this is so great. I do want to I'm gonna try to zip it so you can kind of go through more of these slides.
Yeah, we're gonna try to hustle through this, but I want to also say one more thing on ordinance and law. You can keep going through the slides. It's okay, Matt. It's one of the pieces of the policy that has an asterisk next to it. And the reason why I say that is because it's one of those you've got to prove it to the insurance company. If you want to tap into that coverage, you've got to be able to provide specific examples, documentation, like I said earlier in the presentation, of how your property needs to be built in order to justify ordinance and law. And then if it's on this slide or the one coming up, we will discuss, but it's also a coverage that's an incurred cost. So it's not paid to you up front. You have to actually pay for that upgrade or that improvement before your insurance company pays that money to you. So that will significantly impact your cash flow positions.
Right. So I guess in the interest of time, let's hop to the next slide. And then one more over. Yeah, you touched on it right now. Is when you go through that whole rebuild process, the actual cash value is generally paid up front. Uh, and then I saw within the fires at the very beginning of the year, some people got payouts immediately, others got it was delayed far more, and it's a little more cut and dry if you have a complete loss. But in terms of getting those payouts, getting your claims in as quickly as possible and providing that documentation and starting the process is your friend. You definitely just want to get everything in as quickly as possible. And then as you're going through the rebuild process, relaying those documents that your GC is essentially providing you and giving them to the insurance adjuster and making sure that all the documentation is there so that you can get those payments from the insurance company as quickly as possible. Let's hop over to the next slide. We touched on this a little bit. Yeah, I mean, I kind of, I always have the joke of, hey, if you have a replacement cost of an item, let's say it's $1,000 for something, how are you going to calculate depreciation? And most people are like, they try to think about it. I don't know. I say, I don't know either. And we don't know how the insurance carrier is going to do it either. That's why it is so ambiguous and so scary. And you want to make sure that replacement cost is the thing that you're going to have for your personal items as well as your building. You don't know how that person is going to calculate depreciation, but I can guarantee it's not going to be in your favor. And the older your property is, the more important this item is. Let's hop over to the next one. When to bring in the experts. We've been talking about this all meeting so far, but in terms of bringing in the experts, when you're shopping for insurance, you want a broker that's going to be able to educate you, provide you with data on the market, disseminate it and distill it down into something that makes sense. When you are building the property, you want to make sure they're licensed and experienced so that they can be providing you with all the information to provide to the insurance carrier in a way that the insurance carrier is comfortable with and makes that process much smoother as well. And then if you have a huge claim and your adjuster has not been kind and not worked in your favor, it's probably time to start reaching out to, a public adjuster or a third party to help you through that process, somebody who is experienced in it and knows all the levers to pull. But once again, on the adjusting process and having coverage denied or something being deemed at a lower cost, documentation, receipts, and photos is going to be your friend there. Let's hop to the next slide. Unless you got a
Real
question.
quick, just to interject, we've got a question from one of our attendees. We've got, it's a tough road to hoe for sure. And so someone's asking, what is the good news? Anything encouraging or motivating that rebuild is possible?
You mean, I guess, is the question asking, as far as rebuilding your property, what is the positive news kind of moving forward? Well, I'd say the positive news is different for everybody depending on their policy, and I'd love to be the just, Santa Claus of good news. But it really comes down to how well your policy was written in its inception, and the rebuild process is going to be very contingent on the contractor you have leading the project because they're going to be your source for information, pricing, documentation, and flow of cost and your communication with your insurance carrier. So, quite honestly, the fact that you guys are hosting this and have experience in this area, I'd say that's a huge positive on my end. Um, and I would say overall, it's been a really challenging year for a lot of people. And it's an area that I think is going to be scrutinized and hopefully have some legislation going in the way of the homeowners in the near future. But for now, it's like you got to lean on the people that are experts in the industry that have done it before and that can kind of help you through this process.
And then I'm not sure if everyone is aware, just want to make sure everyone's aware, the news coming out of Catherine Barger's office over the past week, permit fees deferred. Now deferred can mean a number of things. We're still waiting for further clarification on that because it could mean deferred for a period of time, or it could mean deferred because they've been ordered to look into various savings and efficiency measures in other methods and departments to make up for the loss of revenue of permit fees, in which case it would just be permanently deferred. But we're still waiting on final confirmation of how that will be handled. But the good news is, for now at least, they are deferred. If permit fees have been paid, they will be refunded if you've already done that. So that definitely falls under the good, encouraging news.
That
I
is.
just want to add to that a little bit, and I think that question by the person who posted it is really a good one. The one thing that we're trying to do with these rebuild roadmap webinars is provide, it's a lot of information. This is horribly intimidating and very complex. So we understand that. I think that by having Bryan Houser here to be able to address your questions is critical. We're going to have his contact information. We're going to put it into the chat. I hope we can, Matt. And then we're going to also have it posted that's out there. So he's going to be available to answer your questions one-on-one. I hope I can say that, Bryan. Is that okay?
Yeah, absolutely. I'm happy to.
So, so just kind of scheduling some time. We're also here for the entire rebuild process of Altadena. And if we need to bring him back or other experts back, we're going to do it. We're going to take the time to be able to kind of say, we can rebuild, you can rebuild. It is going to be, it's not an easy road, but we're here to provide all the support that we can. So,
I want to say too that building is a very tedious process. It involves jumping through a lot of hoops. Um, Without dealing with an insurance company, it involves jumping through a lot of hoops. So, being a professional in the development field, what we are here to do is to provide you the instruction, the direction, and really show you how to jump through those hoops and make it easy and seamless. And you know, David, I'm sure him and I, we've been navigating this process for many years, and dealing with construction lenders has been a challenge for me over the years. And understanding of all these different insurance policies and being able to coordinate and provide them all the information as quickly as possible to maximize your payouts is going to streamline the construction process because what we're looking to do is rebuild as quickly as possible and to not delay this process because the time is money and the longer that this takes, the more expensive it's going to get for everyone.
Yeah, absolutely. How are we looking on time here? I think, when it comes to certain examples, and we're looking at this one with the extended replacement cost, it's more of a nuanced example. Just essentially what this example is talking about is a lot of times policies can have extended replacement costs of 25% or 50% above your initial dwelling amount. So if your home replacement cost is $1 million and you have an extended replacement for, let's say, 50%, if you rebuild, you can get up to that 50% increase in rebuild cost, and that is separate from ordinance or law. However, in order to get that, your home has to be insured to full value in order to hit that amount. So if your home essentially costs $1 million to rebuild, but you only insured it to 500,000, you're not going to hit that level of extended replacement cost. So it's really important to figure out what your rebuild cost is and make sure it's insured to value. I do have a slide a little bit farther through here that talks about rough estimation build costs per square foot, depending on kind of the, I guess, luxury scale of the property or intricacy of the property. You're going to be posting this afterwards. I would encourage people to kind of look at that as a general reference, but also speak to people, like BZ Build and have their estimates as well on, because certain properties, when you look at them, they're extremely ornate and they take a lot more time. Hillside properties add a lot of different elements. So just being cognizant of all those when you come up with your replacement cost is really important. How are we doing on time?
We're good.
As
We got a
far,
couple
I think we have
minutes.
a few more slides. Yeah, okay. Let's hop to the next slide. So soft costs, once again, this is an ordinance or law in the rebuild portion of it. When you think of the rebuild costs per square foot, soft costs should be included in that amount. And that's the way that insurance companies look at them as well. They don't assume you're going to be purchasing all the items yourself and, sitting there and putting them together. So they definitely know that, planning, architecture, GC fees and everything is all included in that as well. Let's hop to the next slide. So this is an important one that is definitely dependent on the specific carrier. If you are altering the property for your rebuild, that doesn't necessarily mean you are rebuilding and just bringing it up to code. And every carrier kind of has, I guess, their sliding scale of what they figure is a significant change in the property or just bringing it up to code. So I would definitely have a lot of communication with your adjuster in terms of what is determined as a material difference so that you can recoup the full replacement cost and they don't consider it rebuilding somewhere else or you just taking the cash and moving and going somewhere else. The way you're going to get the most amount of money is rebuilding on the same location, bringing it up to code, but essentially rebuilding your property that you had there before.
And that's a way to really recover most your value. Recover what was lost is being able to rebuild because if you just cash out, you're losing a lot of that principle.
Correct. You don't get any of the ordinance coverage. You don't get any of the extended replacement coverage. You still get the dwelling, and sometimes, look, that may be the best route for somebody, but you don't get certain things if you don't rebuild. And if you're materially changing it drastically from where it was, you may disqualify yourself. So open those lines of communication and make sure that those boundaries are set and they're understood by your GC and the adjuster themselves. And this is talking about the kind of the levels of rebuild costs that I've seen in different building values that I've done for policies. So, 225 is very, very baseline. I would almost never try to put something there unless there's a real reason why. But I'd say looking into Beverly Hills and those really luxury hillside properties, you're definitely looking in the over 1,000 a square foot range. And when you're looking at the types of pylons that have to be used or pools that are extended over the hill, you're just looking at a lot of different items that jack the cost up a significant amount. And also materials and those specific, door, window, walls that are very beautiful but expensive. That's where you see that sliding scale of, going from more of a basic construction to more of that super luxury. And so trying to figure out where your house sits in that, you have to rely on your, like a contractor, asking the insurance broker as well, because we have calculators that we use to try and determine that cost. But if you disagree with something in it and you know that your flooring is from some, foreign place and it's really unique and expensive, then you should bring that up and talk about it, because that's a factor that increases the cost.
And then real quick, John Lilly had a question. What about white box builds? I'm a tech guy, but have done finishes, sheathing, electrical, black pipe, copper, fixtures, etc. Any word of clients using this method to reduce initial cost when underinsured? Any downsides? Would the bank even approve this method if the house is more or less functional?
And what you said, white box builds?
Yeah, John, are you saying that you'd be doing like the finishes yourself? Hang on one moment. Maybe I can.
Yeah, if you could bring him up, that'd be great.
Yeah, here we go.
Oh, hey, thanks a lot. Appreciate it. Yeah. So as these per square foot costs keep creeping up, we had a 100+ year old compound, Spanish compound, and I know we're not going to get to that level of detail unless we end up doing the rest of it ourselves. So my question is, let's say we're approaching our limits on the insurance. Can we basically have a very, very basic build where, you know, we have plywood, a subfloor essentially, that we'll take care of ourselves. We'll have like fixtures, but super basic, maybe even install our own kitchen countertops and do a lot of the work ourselves. Have you heard of anyone going this route to have a functional home to move into initially, where the homeowners will, take care of everything after the fact?
Right. So you're just trying to get farther in the build process with your limit and take care of
Exactly.
other stuff.
Yeah, and then allow my salary to cover, making it nicer over the years.
Right, right. I don't know if I have like a really kind of hard and fast answer for that. I would say it really depends on the carrier specifically. And I would, speak with the adjuster, because in the end, like, you should be, if you're rebuilding the house to essentially your best efforts of what it is, you should get that full limit. And how you kind of allocate it along the process is really, I think, a conversation with the adjuster to kind of figure out how they're categorizing it, what they would allow.
Okay, so it just kind of needs to be a discussion to see what they will essentially tolerate.
Exactly. And it's like you can have that open discussion with them, because it's clear. Obviously, you want to rebuild your home as much as possible, but there's certain items that you're willing to take on yourself. And so it'd be better to take on the items that are on the interior than, a roof over your head. So I think it's a reasonable discussion to have with them. And I feel like I I've known adjusters to work with people and not be so callous. So
So
I
I
would
can
say
kind
it's
of
definitely
jump
worth a
in.
conversation.
I can jump in a little bit, and I think that it's a great question. Where we've seen, and I would, if Brian, you have any thoughts to this, I'd appreciate them. Is where a working with a general contractor that's going to be able to kind of take it through rough, because the entire build is going to have to meet the California Building Code and Title 24 energy calculations. So that's the plan set that you're going to be given, that roll of documents that's going to be submitted to the county, and you're going to be given your permit, and that all of the construction is going to have to follow. To be able to save some money, it may be an option if they can allow it, is you could take, so a contractor like ourselves, we could take it to a certain level. Let's say we're doing the foundation, we've now put up all the walls, and you may say that you want to be able to take care of everything after that. That's something that we would definitely could have a conversation on, where a contractor is going to take it to a certain point and stop, and then you're going to have to finish it. But that point that we stop may be prior to the certificate of occupancy or a final. So there's still going to be quite a bit of work that you're going to have to do to complete, and then reach out to the county to get those permits, to get it signed off, and then be able to submit all your receipts for the labor and materials to your insurance company. You can even take it a little bit further. Maybe it's past rough ends. Let's say you might want to do the insulation, the drywall, or maybe you're comfortable doing the countertops and cabinetry. But definitely, if it's something that we can have a conversation with you, or you have it with your general contractor, just kind of talk about how they would work it and how and this is the critical part, how you would get your money back from your insurance provider.
John, I think too, I would speak to specific goals here. Is the goal one to get back into the house with the roof over your head, or is the goal two to maximize your coverage from your insurance company? Um, Defining that goal is going to be key, and then so yeah, so which of those is more important to you?
It's actually kind of both.
Okay.
Getting into the house, I would say, is number one because we're renting now for, just under 10K. It's
Yeah.
insane.
It's
And
insane.
I just want to be back up in Altadena. We all do. My whole family does. And so that would be goal number one. Goal number two, I think would be the secondary of, trying to go a little bit farther with the amount of money that they're limiting us to as far as the insurance policy.
Right.
Because, we had crown molding, we had this beautiful, a lot of interesting, unique things in the house. And if
Oh, we lost you,
it
John.
kind of makes the house.
We're losing you, John. I may have disconnected. Um, Hopefully John can hear us. I think speaking specifically about finishes, those are things that you can speak directly to your general contractor, builder about, and really being able to, value engineer a home that you're going to feel comfortable and excited about. I think that there are definitely certain finishes that you can upgrade over time, and those would be the things like the countertops, for example, that you could go a little bit cheaper on. But ultimately, you're going to have to pass all inspections to get a certificate of occupancy. So you wouldn't be able to move into your home if you just had exposed, plywood subflooring. You'd have to have a finish on top of it. Sometimes you can get away with the concrete. If you had a slab foundation, it was only a single story, and you were able to convince the contract, the inspector that that's how you're going to move in. But other than that, you'd have to have some type of flooring material, whether it be a cheap vinyl, laminate, or a carpet. Um, but I think really with you, it's partnering up with the builder, probably a design build firm that's going to work with you on a plan set that you guys can really both aim to achieve your goal, and understanding your policy so that you're able to maximize your coverages and really exploring everything within your policy, like Bryan has discussed throughout this presentation.
Hey, yeah, thanks a bunch for the information. I appreciate it.
Yeah, thank you.
Wonderful. Yeah, the next couple slides here are, you guys, Jonathan and David and Matt can probably speak to it pretty well as well, having the experience going through it. But it's really, if you hop to the next slide, looking at essentially trying to submit everything that the carrier needs as quickly and thoroughly as possible to get through all of these different elements. And because, like Jonathan said earlier, rebuilding a home without insurance involved is difficult enough, but adding the cadence of the insurance adjuster and wanting proof of things throughout the process, you just don't want that to hold it up. And you want it to go as quickly as possible. So just making sure that you are filing everything with the adjuster with everything that they need as quickly as possible. And maybe if a week of a lot of construction is about to take place, have that pre-conversation with the adjuster and say, hey, just to make sure that everything is documented appropriately, do you need anything special for this kind of effort? If a certain element of the property is going in that's going to have a lot of the bulk of the cost or a lot of intricate elements that are going to cause expense, I think it's important just to really have an open line of communication with the adjuster throughout the process, because the more information they have to defend whatever amount of money they allocate to you, to their boss, will make their job and make them feel more comfortable in, giving you the full dwelling cost of replacement. Let's hop to the next slide. It's just a kind of a rough example of what we were looking at. In this example specifically, you can see that we have ordinance or law is a little bit more than 10%. And so I think it's good to kind of make sure you understand what codes you have to abide by, and if your property is older, maybe allocating a little bit more to that area would be a good route. Let's hop to the next slide. Yeah, this is just kind of a good example of how payments are made. And granted, it's not a boilerplate for every single carrier, but I think it's a good kind of resource to generally understand how different things are moving through the process when you're dealing with insurance and a contractor. So once again, just to make sure that you have everything up to date and accounted for appropriately.
And again, I can share this with everyone. I'm presuming we have everyone's email address. If not, I will throw my email address into the chat. Please hit me up and I will get you this PowerPoint. It is an easy one. It is matt@bzbuildco.com. I threw it in the chat.
Yeah, we really appreciate it, and thank you everybody for sticking with us a little bit longer after the allotted times. But it's kind of easy to be caught up with all of this information. Bryan, it's been fantastic for you putting together this slide deck, which I know took a lot of time, energy, and effort. Thank you for us being able to provide it to the Altadena community and to Southern California people who are the fire survivors. I think this is critical. And that's one of the things that, we continue to try to strive for with this effort, is to provide really good information to people so they can make the right decisions. So thank you for that. I just wanted to, personally just say, how much I value all of this, and for all of your time with us tonight. Thank you.
Thank you very much, Bryan, and thank you everyone for joining us. Really, oh, geez, sorry, I flipped through the thing. Let me stop sharing. There we go. I really appreciate everyone joining in. If you have any questions, again, please hit me up at matt@bzbuildco.com, and I can answer any questions you've got or put you in touch with the right people who can. I can share the PowerPoint with you if you'd like that for reference. Please don't hesitate to reach out to Bryan as well if you have any insurance specific questions. And again, thank you so much. We look forward to talking to you and hopefully helping you get back into your home as soon as possible.
Thanks for having me, guys. Appreciate
Thank
it.
you all.
Thanks,
Thank you very much. Thank you, everyone.
Okay, bye.